Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the last day of the month, the last day of the year, 2014, and this is the daily report for gold and silver. Before we get started, I do want to thank all of my subscribers for your continued support throughout the year. I hope to continue to earn that support as we go into next year. And I really want to wish all of our subscribers a prosperous, healthy, happy, and great 2015. With that in mind, let's get to the report. We have markets trading lower on the last day of the year. Equities markets trading lower, gold trading lower, silver trading lower. First, to gold, off about $17.70. That's our current print. We are at $11.83 and change. The low $11.78.50, the high $12.02. We still see 1200 as resistance. We'll talk about that in a second. As far as silver, that's on the top here. More of a dramatic sell-off, off almost 4% on the day, 3.84%, down about 63 cents, well below 16. 1566, the low 1548, the high 1635. More on silver towards the end of the show. Interesting day for the last day of the year as we go into the conclusion of 2014. When we look at our daily gold chart, for example, we can see that over the last few trading days, we've had completely alternating colors, meaning strong up, and now strong down. We've had that for 4 days in a row. That all in the light of some other markets that are really going to new grounds, oil going to a tremendously lower low. I believe the last time we've seen oil at this level was 2008. That was under pressure, and the dollar finishes off pretty strong for the year. First, let's take a look at the dollar. As we look at that, trading at 90.62 on the day. As I had mentioned, I don't see any real strong technical resistance till about 92. But when we look at really the moves that we've seen over the year, ever since about July, we had this almost parabolic straight rise up in which we've seen it go from these levels here right at around 79 to above 90. So a tremendous move. And most importantly, you can see that it really did exceed this triple top starting in about end of 2008. So we do have a dollar that's going to finish pretty strong on the year. Equities markets are under pressure as we go into the final day of the year. 2053, we know we had these highs at about 2086. You can see that sell-off here. My concern in terms of the stock market is not so much the smaller sell-off. We'll have to see what happens on Monday because Friday is going to be a quiet, low-volume trading day. But when you look at the weekly chart, you can see why there is some potential on a technical basis for there to be some sort of a correction. And this is really the chart that I'm talking about, E-mini, Standard & Poor's 500 weekly chart. And on this chart, we have basically created one fib extension because what we're going with on the assumption is that we had a wave 1 and then we had our wave 2 and we are currently in our wave 3. Now, wave 3, by the nature of an Elliott wave forecasting model, cannot be the shortest of any of the impulse waves. So it would have at least had to be equal to, but it's far exceeded that. But typically, you can see this market go 161%, 150% that of A on a very strong market. And that's obviously what we've had. We're really looking at 2100. We had 2086 as the high, but 2100 as the mark on a 150% extension, and then 2181 is the 161. So these are the two real levels that I want to look at very closely as areas that have a potential for having some sort of market correction on a technical basis. So based on the fact that we've seen a little bit of resistance here, doesn't really surprise me that much because if we look, for example, at the 138% retracement, that comes in at 2018. Let's put our line across. We can see that as this market came up, it definitely found a little bit of resistance, and we did get a small correction here before moving back up. So we saw that we saw the Fibonacci areas actually holding some weight. And so I do think these are important areas to watch. As I said, we'll have to see what happens next week. Now, as far as crude goes, this is a monthly chart. We're looking at a much more long-term chart because I wanted to take a look at this last dramatic fall. This is when the market was above 140 and actually fell to about $30 per barrel, and you can see the kind of action we saw. What we want to look at on our weeklies and longer term charts is some sort of consolidation in an area that actually makes sense. And when we do that, we do find a couple of areas. If we look at the bottom right in here, this low here is right at around $50. And so that could be, on a technical basis, a significant area to look for some support. And of course, if it keeps drifting, we would look at these bodies here at around 40 and then 30. But I don't think we're going to see oil get much below 50 personally. But if you would have asked me at the beginning of this year if I thought we would finish oil at $50 a barrel, I would have said no then too. So things do surprise us nonetheless. So we're seeing oil finishing very, very weak on the year. S&P still, though, when we consider where they began trading at the beginning of this year at 1753, we've had a tremendously strong showing this year in the equities markets. So traders, what information, if any, can we really glean from this last week of trading activity within gold? And I have to tell you, not a lot. Because with the alternating strong days up and strong days down, it tells me that there has been such a small or lower amount of volume, an increase in volatility and sensitivity, that we're really getting this upside down, round and round, as we kind of titled it yesterday, move in gold, in which we're just seeing it move back and forth between our interim support and resistance levels that we've identified. What we really want to see, of course, we want to pay a close attention to the stock market, because if that begins to come down, if the dollar begins to weaken, oil begins to firm, we could see some firming in the gold market. We've identified key areas that we're going to need to watch, and I believe most important areas between 54 and call it 68, I believe it is, which is where we have our 50, as well as our 61% retracement levels from these bigger moves here. The second thing that we need to watch on the bear side is this particular resistance line. The inability for it to break above that signals lower pricing, and we've definitely really talked about where we think this market could go over and over again. As I said, I believe it could go as low as about 1032. But we certainly don't have that final nail in the coffin, so to speak, to gold, because it's maintaining a price point above these key levels. And even with the pressure that it's at, this is a logical point. If gold is to find a bottom, and that's a big if, but if it's to find a bottom, this is a logical place to look for it. So we want to pay close attention to this price point. We want to pay close attention to this resistance line moving down on a technical basis, on a fundamental basis. If the dollar remains strong, if equities remain strong, we believe there will be continued pressure within the precious metals markets. Also, let's look at oil, because oil, I believe I was watching a report today that said that added $75 billion worth of purchasing capital for the consumers here in the United States. That's a big chunk of change to be able to spend on something else besides oil. And so we'll have to see if that props up different other sectors within the economy. And then traders, finally, silver. You know, silver has not excited me over the last couple of months, and guess what? It still does not excite me. I believe that this break below 16, of course, we've seen this market all over the board. We'll have to wait till Monday to really get a sense for if we get follow through, but this type of move, as I've said before, breaks below any kind of support level I'm looking at, with the next major support level, of course, one at 15 and then again at 14. So I'm not really excited about any upside potential in silver right now. But as I said, these last couple of weeks have not been giving us a true story, I believe, because of the thinness or lack of volume within the market. So let's see how that plays out. Again, I want to wish all of our subscribers a prosperous, healthy, and happy new year. As long as we have family, prosperity, and health, we really have it all. Let's be grateful and thankful. We'll talk to you next year for another daily update and review. Bye-bye.